Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer at Worth Asset Management. Today is May 8, 2023. I'm going to go over your new 3 threes for the week. We've changed up the format a little bit and we hope you like it. The first one is our top 10 major asset classes, their performance on a week, year-to-date, and one-year basis so we can get a feel for how the markets are moving. Then we're going to look at those same top 10 major asset classes and how we are positioned on a short-term and intermediate-term basis. And then the top 3 market movers for this week. So let's jump on in.
Okay, let's go over the top 3 threes for the week. The first one being performance of the major asset classes. We look at 3 different time periods. First one, we look at the week. How did the week happen for the market? The market started off on a downturn. A lot of it had to do with the Fed raising interest rates on Wednesday, and then the jobs number came out on Friday, which was higher than expected, and the market rallied. However, bonds across the board, the S&P 500, Russell, real estate, and commodities, all, even with the rally on Friday, ended up down for the week. The NASDAQ was basically flat. The big winner was gold, up 1.29 for the week. But if we zoom out a little bit on a 3-month basis, the NASDAQ and the S&P 500 and the aggregate bond are basically flat to zero, so not a lot of movement there. We do, however, have some big losers. The Russell 2000, real estate, emerging markets, and commodities are all down quite a bit for the last 3 months. And your only really big winner is gold. A lot of that has to do with the international and the dollar, the weakness in the dollar, and rise of interest rates helped propel gold as the safety trade over the last 3 months. Zooming out even farther on a one-year basis, still a lot of red. So, but if you look at the S&P 500, basically down slightly. The long bond, NASDAQ, small caps, real estate, commodities, all down big. Again, the only couple winners are the world ex-US and gold, again, as a safety trade over the last 1 year. Okay, let's go over a new chart this week. Take a look at the top 10 major asset classes, and we're going to look at them over 2 time periods. Trade, which is our short-term look, which is less than 3 weeks, and the intermediate term, which is less than 3 months. It's actually in between 3 weeks and 3 months. So for instance, looking at the asset class currencies, we use the US dollar, and we are bearish on a short-term basis and on an intermediate term basis. And on the other side, on the flip note, we have gold. Using as the gold index, we are bullish, and that makes sense because they typically trade counter to one another, and we are bullish on a short term and on an intermediate term basis. As far as the major indexes, the top 10, the bond, the S&P 500, NASDAQ, international, etc. We are bearish short term, but we are bullish a little bit farther out, intermediate term basis. As you can see, another bearish formation here on the small cap side. We do not like them on a short-term basis or on an intermediate term basis. So this is something we look at on a daily basis for our clients, but for purposes of the weekly update, we take a look at this at the end of each week to give you a feel for the top 10 major asset classes. All right, let's look at the equities, though, again, on a short-term basis over the last year. We keep going over this every week, and we are still trading into that, really that resistance zone, and we can't get out of it. You hear a lot about the 4,200 level, where now you see why. We just cannot break out of that. And so if you look over the past year, we're still at 4,100. So that's why the market really hasn't gone anywhere over the last year. And if you zoom out and look at it over the last 2 years, we are still at 4,100. So over the last not only year, 3 months, 2 years, The S&P 500 is still at 4,100. So even though it's gone up and gone down through 2022, we're right back to where we started 2 years ago. All right, let's look over the top three market movers for this week. Got a lot of inflation data, which will be good to see if these rise in interest rates are actually starting now to finally bring inflation down. And so we have the CPI on Wednesday, and it's projected to have climbed 0.7 over the last month. Which is down from 0.1 rise in March. So year over year, which is what they really look at, prices were likely to come in at 4.9, which was less than 5. So it's a little bit of a positive, but it's at least going in the right direction. So if that is true, then that will be a positive for the week. They'll look at the core because that's still a little bit higher when you exclude food and energy. That's at 5.6. So as long as those numbers are coming down, that would be good for the market. On Thursday, we have the producer price index. That's looking at manufacturers and wholesalers. They're projected to have risen 0.3 last month. And their year over year is likely to be up 2.4, which will be the slowest pace since January 2021, which is 2.5 years ago. So that'll be another positive. So two positives, hopefully. And then the third one is more earnings coming this week from several big companies, including PayPal, Airbnb, Disney, Electronic Arts, Occidental, and car makers Toyota and Honda. So we shall see what those kind of earnings look like to wrap up the last few weeks of earnings. All right, that's it for this week. Thank you for joining us. Our next update is Monday, May 15th. Continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.